The current live price for NVIDIA Corp stock is $208.85, reflecting a significant intraday gain of 7.75% as of the 9:30 a.m. EST snapshot on this Monday, November 3, 2025 trading session. That kind of upward velocity right out of the gate is not just market noise, it's a profound statement, and the headline everyone is focused on is the staggering news that the company has secured a pre-order booking total of $500 billion for its next-generation Blackwell and Rubin chips through 2026, an enormous figure that explicitly excludes China and Asia. This single data point is what's creating the market's frenzied expectation, effectively suggesting that the already stratospheric demand for their hardware is not just holding steady, but accelerating into a nearly unbelievable new echelon. Investors were expecting continued strength, certainly, especially with the AI tailwind, but a concrete $500 billion booking figure announced at the recent GTC conference was the kind of unquantifiable insight that fundamentally resets the baseline for what NVIDIA's growth trajectory truly looks like. It forces a complete reevaluation of all current valuation models, making the recent trading multiples, which were already high, seem almost conservative in the face of this kind of confirmed, long-term revenue visibility. The common ground narrative is straightforward. NVIDIA stock is the infrastructure play for the global artificial intelligence boom. It's the picks and shovels company for the digital gold rush, specifically known for its graphics processing units, or GPUs, which are the essential engine for training and running large language models and other forms of generative AI. Everybody knows this story. It's the reason the stock has had such a phenomenal run over the last year, gaining well over 30%, which trounces the S&P 500 and the broader tech sector ETF performance. However, the contrarian, deeper take that the $500 billion in bookings introduces is a challenge to the prevailing belief that the stock's valuation is already stretched to its breaking point, suggesting an AI bubble that is about to burst. The reality is that this immense booking number, which is effectively a massive vote of confidence and capital expenditure from the world's largest hyperscalers and enterprises, implies that the current growth phase is less about speculative frenzy and more about a locked-in multi-year technological transformation cycle. It shifts the argument from, is AI a fad, to the world's biggest corporations have committed $500 billion to this specific hardware provider to build their new digital factories. That is a completely different risk profile, and it's why the stock is showing such pronounced strength in today's session, with trading volume spiking as institutional investors try to rapidly recalibrate their exposure to this new reality. The velocity of the trade is everything right now. Looking at the NVIDIA stock movement recently, the intraday swing today is the climax of an already bullish period. The move higher on this Monday follows a strong rally last week, catalyzed by the details coming out of the GTC conference. The stock made a notable jump recently, trading into new 52-week high territory, pushing past its recent resistance levels as the market digests the implications of the Blackwell and Rubin chip bookings. This suggests a significant and successful institutional accumulation phase. The sheer size of the Vanguard Group and BlackRock Inc. holdings, for instance, which are two of the largest institutional owners, gives them an outsized influence. Their activity and the movement of other massive funds tracked by services like the Institutional Holdings Reports shows net buying, or at least a stable holding pattern, which acts as a powerful floor under the stock. You can see the collective impact of these large funds in the way the stock handles pullbacks. They tend to be relatively shallow because of that institutional appetite. Short interest remains quite low, reinforcing the overwhelmingly bullish sentiment. However, one key piece of tension in the daily swings comes from the consistent insider selling, including automatic sales from CEO Jensen Huang. While these are often pre-scheduled sales for diversification and tax purposes, they still represent millions of shares hitting the market and can cap daily gains or amplify minor pullbacks, adding a slight headwind against the massive institutional buying. This tension between insider prudence and market euphoria is a daily technical feature for the stock. The broader sector momentum for semiconductors and technology is also a huge factor. The tech sector, generally speaking, is leading the market's gains this quarter, and NVIDIA stock is acting as a primary driver, pulling indexes like the NASDAQ 100 higher. This isn't a solitary movement. The company is benefiting from and contributing to the massive capital rotation into digital infrastructure. This is also evident when you look at the ETF exposure, where funds like the Vanguard Information Technology ETF, which is one way to invest online in a diversified manner, holds a significant weighting in NVIDIA. The forthcoming Q3 earnings report is a near-term catalyst that all investors, from those using a sophisticated interactive brokers trading platform to those using the Robinhood app for fractional shares, are watching. Analysts are already anticipating a substantial year-over-year earnings increase, following previous quarters where the company has consistently delivered qualitative earnings beats and aggressive forward guidance. When a company's reality repeatedly exceeds the market's high expectations, you create the conditions for a sustained, powerful investment uptrend. To briefly outline the core business model for those newer to self-investing, NVIDIA's primary engine is its data center segment, which is where its high-performance GPUs like the H100 and the forthcoming Blackwell and Rubin chips reside. These chips are not just graphics cards, they are parallel processing supercomputing units essential for the computation-intensive tasks of modern AI, high-performance computing, and cloud infrastructure. This segment now utterly dominates their financials, overshadowing the older gaming segment, which produces chips for PC gamers, and is the traditional NVIDIA stock story, and its automotive segment, focused on autonomous driving platforms. The company operates on a fabless model, meaning it designs the chips but contracts out the manufacturing, which allows for incredible capital efficiency and high profit margins. The entire ecosystem is then locked in with the CUDA software platform, which makes it extremely difficult for customers to switch to a competitor's hardware, even if an alternative chipmaker like AMD releases a slightly cheaper or faster chip. This software moat is the hidden strength that underpins all that hardware demand, and is the reason they have such incredible pricing power. Older reports confirm this pivot. Just a few years ago, gaming was the top revenue generator. Now data center revenue is the overwhelming majority, showing a fundamental successful shift in the entire business's focus and execution. Looking ahead, the future outlook for NVIDIA stock is less about whether they will grow, more about how much they will grow and whether they can sustain their current level of market dominance. The $500 billion in bookings is a massive tailwind, effectively de-risking a significant portion of their near to midterm revenue. Key catalysts to watch include the successful ramp-up of the Blackwell and Rubin production lines. Can the company meet this unprecedented demand without supply chain hiccups? The market is pricing in a yes, but execution risk always exists. Another huge potential catalyst, one that could add billions in untapped revenue, is the shifting landscape of U.S. export controls, particularly regarding sales of advanced chips to China. Any softening or specific carve-outs in that regulatory environment would immediately open up a massive addressable market that is currently constrained. The flip side is the risk of intensifying competition. While the CUDA software ecosystem provides a substantial moat, large customers like Google, Amazon, and Microsoft, the very hyperscalers driving the current bookings, are also developing their own custom AI chips, known as ASICs, for specific internal workloads. This self-supply threat could chip away at NVIDIA stock's market share over the very long term, a risk that investors using platforms for online investing need to factor into their long-term models. The final piece of the expectation versus reality frame brings us back to valuation. The market generally expects NVIDIA stock to continue trading at a premium due to its growth, but the reality is that the new bookings figures are actively pushing analyst estimates higher, which effectively makes the stock less expensive on a forward-looking price-to-earnings basis than it appears on a trailing 12-month basis. This is a crucial distinction. The company's future growth rate, projected to be over 40% year over year for the next few years, is what analysts are using to justify a $225 to $320 price target range. The current price of $208.85 on this Monday morning is therefore viewed not as an overextended peak, but as an attractive entry point by those who believe the $500 billion booking number signals a multi-year growth runway. This conviction is what separates long-term investment in a stock like this from short-term speculation. It's a core principle that can guide any strategy, whether you're opening an individual brokerage account with Fidelity or managing a passive portfolio through Schwab Intelligent Portfolios. Now, I want to hear from you. Comment below what you think is the bigger long-term risk for NVIDIA stock: intensifying competition from AMD and custom chips, or geopolitical and export controls. The insights are clear. Expectations of continued